6 months ago in Houston, Texas, a 28-year-old hospital lab technician named Jamal Carter walked into the leasing office of an apartment complex carrying his pay stub, his bank statements, and his ID. Jamal earns $54,000 a year. Steady job. 3 years at the same hospital, direct deposits like clockwork, zero collections, no bankruptcy, no drama. The leasing agent ran his credit, came back 4 minutes later. She said, "I'm sorry, sir. We can't approve your application. Your credit score is 612 and your file is thin. We need at least 660 with established history." Jamal had paid his phone bill on time for 6 years, his Netflix subscription for 4, his electric bill for 3, his car insurance for 5. None of it was on his credit report because phone companies, streaming services, utilities, and insurance companies almost never report payments to the credit bureaus. So Jamal had been building positive payment history for 6 years, and the credit system had no record of any of it. The leasing manager, Ms. Patterson, 53, has worked in property management for 25 years, pulled Jamal aside as he was leaving. She gave him a 3-step plan, took her 90 seconds to explain. 6 months later, Jamal's credit score went from 612 to 698, an 86-point increase. He got the apartment. He also got pre-approved for a car loan at a much better rate than he'd ever had access to before. I'm Trish, and I read the policies and the credit bureau rules nobody bothers to explain. So the same 3-step move Ms. Patterson gave Jamal, you're going to know by the end of this video. From bills you're already paying, with no new debt. This is one of the most quietly damaging gaps in the American credit system. Most people have never been told this. Phone companies, utility providers, streaming services, rent and insurance, the bills that actually make up the largest portion of a working person's monthly budget, almost never report your on-time payments to Experian, Equifax, or TransUnion. The only thing they do report when something goes wrong, late by 90 days, sent to collections, then it shows up as a negative mark. So the system is structured to only ding you for failure, never reward you for years of consistent success. The data on this is brutal. Roughly 26 million Americans are credit invisible. They have no credit file at all. Another 19 million are credit unscorable, meaning they have a thin file the bureaus can't generate a reliable score from. That's 45 million working Americans who pay their bills on time but appear in the credit system as financial ghosts. For Jamal, and millions of people like him, this gap is the difference between getting an apartment and being denied, between a 7% car loan and a 14% car loan, between a $300,000 mortgage approval and a "we can't help you today." Over a lifetime, the cost of an unscored or thin credit file runs into the tens or hundreds of thousands of dollars in higher interest, denied applications, and missed financial opportunities. The 3-step move Ms. Patterson gave Jamal is the modern fix for this gap. None of the steps require new debt. None of them require qualifying for anything you couldn't qualify for already. They simply make the credit bureaus aware of payment history that already exists. 3 moves. Done in under 90 minutes total. Score boost typically visible within 30 to 90 days. Let me walk you through each. 1 quick framing. Your credit score is calculated from data in your credit file, a record maintained by the 3 major bureaus. The score itself is just a math formula applied to the contents of the file. If something isn't in your file, it doesn't affect your score. Historically, the only data that landed in a credit file was data from reported accounts. Credit cards, mortgages, auto loans, student loans, personal loans, the accounts that financial institutions reported to the bureaus on a monthly basis. Phone bills, utility bills, streaming subscriptions, rent payments, these don't fit in the historical credit reporting infrastructure. The companies that bill you don't have agreements with the bureaus to report your monthly payments. In the last 5 to 8 years, that started to change. 3 specific services have built infrastructure to bring this previously invisible payment history into your credit file. They are not all created equal. They report to different bureaus. They cost different amounts. They produce different score impact. The Ms. Patterson 3-step plan combines all 3 for maximum impact. Let me walk through them in the order Jamal executed them. Move 1. The free starting point. The first move is free. It's the move every person reading this should do tonight, regardless of credit situation. The service is called Experian Boost. It's owned by Experian, one of the 3 major credit bureaus. It's been operating since 2019. Roughly 14 million Americans have signed up. Here's how it works. You sign up for a free Experian account online. You connect the bank account you use to pay your bills. Experian's system scans the last 24 months of transactions. It identifies on-time payments to qualifying providers, phone companies, utilities, streaming services, insurance, online rent. You verify which payments you want to add. Boost then attaches that payment history to your Experian credit file. 3 things matter about how this works. 1. Only positive payment history is added. Late payments are ignored. There is no downside to enrolling. 2. The eligible categories are specific: phone, cell, and landline. Streaming: Netflix, Hulu, Disney+, HBO, etc. Cable and internet. Utilities: electric, gas, water, trash. Insurance: auto, home, life, but not health. Online rent payments through certain platforms. The bills must be in your name. 3. Boost only affects your Experian credit report. Equifax and TransUnion are unaffected. This is the most important caveat. About 80% of FICO scores used by lenders pull from at least one bureau, but if a lender uses an Equifax or TransUnion-only product, Boost won't help. Average score increase from Experian Boost: 13 points for FICO score 8. Some users see 5 points. Some users see 25 plus. The variance depends on how thin your file already is. For Jamal, Boost added 19 points. His Experian file went from thin to populated with 18 months of phone, internet, electric, water, Hulu, and Disney Plus payments, all on time, all previously invisible. Time to set up: 8 minutes online. Cost: free. Score change visible within 24 hours of completion. This is the first move. If you do nothing else from this video, do this. Tonight, one specific caution. You are giving Experian access to your bank account login to scan your transactions. Experian uses bank-level encryption and does not store your banking password. Tens of millions of people have done this without issue, but it is a real consent you are giving. Make sure you're comfortable with it before clicking through. Move 2. The trade line expansion. The second move addresses the limitation of the first. Experian Boost only affects one bureau. To get your other 2 reports updated, you need a service that reports as a trade line rather than as a soft data overlay. The service Ms. Patterson recommended to Jamal is called eCredible Lift. Jamal hesitated. He saw the monthly fee, about $10, and almost closed the tab. He'd been actively trying to cancel subscriptions, not add new ones. The whole reason his credit was thin in the first place was that he was a 28-year-old who didn't believe in monthly fees for things. Then he did the math. The apartment he wanted was $1,600 a month. The apartment he could currently get with his 612 score was about $1,200 a month, but in a worse neighborhood 35 minutes farther from the hospital. The difference in commute, alone, was about 14 hours a week of his life. If a $10 a month service for 6 months, total cost $60, got him into the better apartment, the math wasn't even close. He'd save the $60 back in gas in less than a month. The 14 hours a week he'd save in commute were essentially free. Jamal signed up. Here's how Lyft works mechanically. You connect each utility provider account directly. Lyft pulls payment history straight from the provider, up to 24 months retroactive. The data gets added as a trade line on your TransUnion credit report. A trade line carries more weight than the soft data overlay Experian Boost adds. The credit scoring algorithm treats trade lines closer to how it treats traditional credit accounts. You can link up to 8 accounts. Eligible providers cover gas, electric, water, garbage, cable, internet, and most major mobile and landline phones. Most major US utilities are on the compatibility list, but check yours before signing up, because some regional providers aren't. If a $10 a month service for 6 months, total cost $60, got him into the better apartment, the math wasn't even close. He'd save the $60 back in gas in less than a month. The 14 hours a week he'd save in commute were essentially free. Jamal signed up. Here's how Lyft works mechanically. You connect each utility provider account directly. Lyft pulls payment history straight from the provider, up to 24 months retroactive. The data gets added as a trade line on your TransUnion credit report. A trade line carries more weight than the soft data overlay Experian Boost adds. The credit scoring algorithm treats trade lines closer to how it treats traditional credit accounts. You can link up to 8 accounts. Eligible providers cover gas, electric, water, garbage, cable, internet, and most major mobile and landline phones. Most major US utilities are on the compatibility list, but check yours before signing up, because some regional providers aren't. For Jamal, 4 of his accounts qualified: phone, electric, water, and internet. Lyft pulled 18 months of perfect payment history from each. Within 6 weeks, his TransUnion score was up 24 points. He kept Lyft for 7 months total. Cancelled when he got the apartment. The trade lines stayed on his TransUnion file even after he cancelled. The score impact persisted. Total cost, about $70 across the 7 months. Score boost, 24 points. Apartment cost differential covered, about $400 a month for 18 months. Total ROI on the $70 spend, somewhere around $7,000 in saved rent across the lease. Most people who use Lyft do exactly this. Sign up for 6 to 12 months, establish the trade lines, cancel. The reported history persists. Move 3. The Credit Builder Loan Stack. The third move adds something the first two don't: active credit account history. Both Boost and Lyft add positive payment history to existing bills. Neither adds an actual account. For thin file users like Jamal, the missing piece is often account diversity. The credit scoring algorithm looks at how many active accounts you have, how long they've been open, and what types they are. A file with only utility trade lines reported through services like Lyft is still considered thin by some lenders. The fix is a credit builder loan. The two best-known providers are Self and Credit Strong. There are credit unions that also offer them. The mechanic is the same. Here's how a credit builder loan works. You apply online. You're approved for a small loan, usually $500 to $2,500. The lender does not give you the money up front. Instead, the lender deposits the loan amount into a locked savings account. You make monthly payments, typically $25 to $48 a month, for 12 or 24 months. Each payment is reported to all 3 credit bureaus as a paid-on-time account. At the end of the loan term, the locked savings is released to you. The economics? You pay a small interest charge over the life of the loan, typically $30 to $80 in total interest on a $500 to $1,000 loan over 12 to 24 months. In exchange, you get 12 to 24 months of perfect payment history reported to all 3 bureaus, plus the loan itself appears as an installment account in your credit mix. For thin file users, a credit builder loan typically adds 15 to 30 points within the first 6 months across all 3 bureaus simultaneously. The score impact is durable because it's based on real reported credit history. Jamal opened a $1,000 credit builder loan with Self in month 1 of his journey. By month 6, he had 6 months of paid-on-time installment account reporting on all 3 bureaus. The combined effect with Experian Boost and Lyft pushed his middle bureau score from 612 to 698 over those 6 months. Cost for Jamal, about $35 in net interest over 12 months. Score impact, 86 points combined across the 3 moves. Apartment lease, approved. The combined math. What to realistically expect. Let me set realistic expectations because the credit improvement industry is full of hype and false promises. Average solo Experian Boost, 13 points. Average solo eCredible Lyft after 6 months, 10 to 20 points on TransUnion. Average solo credit builder loan after 6 to 12 months, 15 to 30 points across all 3 bureaus. The combined effect ranges widely depending on starting point. Thin file users like Jamal, combined boost of 50 to 90 points across 6 to 12 months. He saw 86. Established credit users with 720 plus already. Much smaller combined impact, typically 5 to 15 points. The marginal effect of additional positive data shrinks as your file matures. Established credit users in the 600 to 700 range. Combined impact of 25 to 50 points across 6 to 12 months. The mid-range is where these tools provide the most leverage for people who already have credit but want to improve it. If your credit is excellent already, these tools won't move the needle much. They are designed for people who are thin, who are rebuilding, or who are stuck in the mid-600s and need to break through to qualifying thresholds for better rates and approvals. For everyone else, Walter, the retired accountant from earlier in this series, with his 820-plus score from disciplined statement timing payments, these tools wouldn't add meaningful value. Walter built his score the old-fashioned way and doesn't need to supplement. For Tasha, the nurse from earlier in this series who used the credit limit increase plus APR reduction plus statement timing trick to go from 712 to 798, the bureau coverage moves we covered today would be useful if she wanted to push from 798 toward 820, but the marginal benefit is much smaller than for thin file users. Match the move to the situation. Be honest about your starting point. Plan accordingly. 3 objections come up here. Let me handle them. Objection 1. I don't trust giving my bank login to a third party. It's a valid concern. Both Experian Boost and eCredible use industry-standard bank-level encryption. Your bank login credentials are not stored in plain text. Third-party data aggregators like Plaid handle the connection. Tens of millions of Americans have done this for various services, including budgeting apps, investment apps, and these credit tools. The track record on security is strong, but if you're not comfortable, that's a legitimate decision. Skip Experian Boost and Lift. Use only the credit builder loan, which doesn't require bank account access. Your potential score boost is smaller, maybe 15 to 30 points instead of 50 to 90, but you maintain full control over your bank credentials. The choice is yours. Both paths are reasonable. Objection 2. What if my score doesn't go up? It might not. There are no guarantees with any credit improvement tool. Average results are not individual results. The most common reasons for minimal score boost, your file is already strong, in which case you don't need these tools. The bills in your name aren't extensive enough to materially change the file, or the bureau being affected isn't the bureau your specific lenders pull. The mitigation. For the free service, Experian Boost, there's no downside to trying. You either get a boost or you don't. For the paid services, Lyft, credit builder loans, set a 6-month evaluation period. If your score hasn't materially improved by month 6, cancel. The downside cost is contained. For Jamal, the combined cost across 6 months was about $90. For an apartment that would have been denied otherwise, that ROI is hard to beat. Your situation may differ. Objection 3. Won't all of this hurt my score with hard inquiries? The good news: Experian Boost generates 0 hard inquiries. Bank account linking is not a credit pull. eCredible Lyft sign-up is also not a credit pull. The credit builder loan from most providers, Self, Credit Strong, generates a soft inquiry only. They do not pull a hard inquiry on your file. So all 3 moves combined produce 0 hard inquiries. That's part of why they're attractive. Most other credit improvement strategies, new credit cards, loan applications, come with hard inquiry trade-offs that temporarily drop your score by 5 to 10 points. These 3 moves don't have that trade-off. The score impact is one-directional, up or no change. Action steps. 3 steps. Tonight, this week, this month. Step 1. Tonight. Sign up for Experian Boost, free, 8 minutes online. Go to Experian.com/boost or just Google Experian Boost. Create a free Experian account if you don't have one. Connect the bank account you use to pay your monthly bills. Let the system scan your transactions. Verify which on-time payments you want to add to your credit file. You'll see your FICO Score 8 update within 24 hours, probably an increase of 5 to 25 points depending on your starting file. This is the highest ROI 8 minutes of your week. Do it tonight. Step 2. This week. Evaluate eCredible Lyft. Visit eCredible.com. Search the compatibility checker for your specific utility, phone, internet, and cable providers. If at least 4 of your accounts are compatible, sign up for the basic Lyft service at $9.95 a month. Connect each compatible utility account. Lyft will pull up to 24 months of retroactive payment history and report it as a trade line to TransUnion. Score impact typically visible within 30 to 60 days. Plan to keep Lyft for 6 months minimum. then reevaluate. The trade lines remain on your TransUnion file even after you cancel. Total time investment, about 25 minutes initial setup. Cost, about $60 for 6 months. Step 3. This month, open a credit builder loan. Pick one provider. Self or Credit Strong are the most established. Apply online. Choose the smallest loan size available, usually $500. Choose the 24-month term to keep monthly payments low, around $25 per month. The loan deposits into a locked savings account. You make 24 monthly payments. Each payment reports to all 3 credit bureaus as a perfect installment account. Total interest cost over 24 months, typically $30 to $60. At the end, your locked savings is released back to you. Net cost of the entire 24 months. The small interest charge. Score impact, typically 15 to 30 points across all 3 bureaus within 6 to 12 months. Account mix and active trade line boost compounds with the other 2 moves. 3 steps, 1 free, 1 small monthly cost, 1 small one-time interest cost, combined potential score boost, 30 to 90 points within 6 to 12 months, with thin file users seeing the largest gains. The infrastructure has existed for years. Almost nobody knows about it. Now you do. If this video helped you, or if you've ever been denied for an apartment, a car loan, or a credit card with a thin file, do me one favor. Hit the subscribe button. New video on this channel every single day. Each one is a specific move that puts real money back in your pocket, same way this one just did. And here's what's coming tomorrow. A complete pivot from the technical to the cultural. Across this entire series, you've met them. Eleanor at $4.1 million. Walter at his quiet 800-plus credit score and his Tuesday lunch ritual. Henry the truck mechanic with $2.1 million. Margaret the librarian who left $11 million to a small college nobody had heard of. They have something in common, beyond the money, beyond the discipline, beyond the boring habits. They have a code, a set of unwritten rules they all follow about how they talk about money, who they share details with, how they respond to status questions, and what they refuse to discuss even with close friends. Tomorrow, I walk you through the 5 things actually wealthy people never talk about, the 5 conversational territories they protect, why they protect them, and the social signals you can learn to spot to identify the people in your own life who are quietly far wealthier than they appear. It's the most underappreciated layer of stealth wealth, the conversational layer. Tomorrow, I'm Trish. Talk to you then.